think, a pretty good one. So we're going to talk about a lot of different things. First of all, I want to say thanks everybody who showed up for the live stream. And of course, we've got from Into the Cryptoverse. He is here yet again. And then we've got also James from Invest Answers, thankfully, to kind of set us on the right path. And of course, if you're looking for their channels, there's a link in the description for their channels. And I also put a nice link to James's Patreon, which I am a member, and also to Ben's website, In the Cryptoverse, which I am also a member, and a pretty good shill for both. All right. So, gentlemen, how is everybody doing today after this crappy market?
I mean, I'm doing pretty
exactly.
Good. You know, I wanted the Bitcoin dominance to go up, which it's doing, and it's like sort of like the silver lining, right? Is bear markets kind of suck, but if you can kind of protect yourself to some degree, then it's not as bad.
That's right. That's exact. And I think James even had a pretty good video about risk management. Not too long. I watched it. It's pretty good.
Thank you.
So let's get to it. We got a lot of things to go over. So first up, this is a long question, but I think it's super important to talk about it. So the Luna collapse. I'm sick of talking about it. I'm sick of dealing with it, but there's some real gems to glean from what happened. So the Luna collapse, I think, humbled a lot of us. It humbled Mike Novogratz. It humbled me. It humbled a lot of people. And even Mike stated in a letter to his shareholders to observe 4 things. And it was smart. Keep a diversified portfolio, take profits along the way, have a risk management framework, and all investments happen in a macro environment. So here's the question for you guys, and I'll start with Ben first. What's your biggest investment mistake? And why is it that people only remember these basic principles during the big downturns? You know, like people will buy meme coins and NFTs and all that stuff. And then the third part is, what's your golden rules of crypto investing for risk management? So it's a pretty loaded question. Biggest investment mistakes? Why do people only figure it out during the downturns? And what's your golden rules? Ben, my man, I will start with you.
Sure. I think one investment mistake can really hurt a lot of people, and it's hurt me in the past as well, is thinking about, you know, a sunk cost. Something that you see a lot in bear markets are people continue to think that they have to hold on to all these meme coins and all these random coins because they're down like 40% or 50%, and you know there's no way they can get out now. But you know, I've lived through enough of these bear markets to know that you know there's something called a sunk cost, and if you had that money available to you today, would you put it in that project? And if you wouldn't, that doesn't mean you have to hold it just because you're down a certain percent. You can protect your capital and get it out into something less risky. So, my best example was, back in 2014, buying altcoins in the bear market. I mean, it sucked.
Yes.
And by the time we hit the bottom, I didn't have any money left to put into the market, because I'd already put it all into the market. And I kept falling for the, the pump's going to happen next week. The pump's going to happen next week. And I just kept believing it and putting money in and putting money in. And I was like, what am I doing? I'm not. And then it finally dropped another 50% at the end of that year, or actually early. It was actually early 2015 was when the bottom occurred. I didn't have any money left to put in the market. And I think, had I cut some losses on altcoins once the bear market was officially, extremely well, telegraphed to everyone, it would have gone a long way. And if I had just been patient and I had stacked cash, like if I had just been like, you know what, I'm not going to buy falling knives. I'm not going to try to catch these falling knives. I would have done so much better, because the truth is everyone's so focused on these altcoins and, where are they going to bottom? But again, the truth is with a lot of these things, after we find a bottom, we're going to go sideways for a while before we likely go back up. So you should have time. I just think that trying to catch these falling knives of altcoins has been one of my biggest mistakes in the past by far. And recognizing that it is okay to sometimes take a loss on a trade is recognizing that's okay is sort of what helps me start to do a little bit better.
Makes sense. And then the next, well, you know what? I'll jump, because the second part was, what are oh yeah, sorry, I bleeped out for a second. What was why do people not remember these things as things go around? But you know what, but hang on to that, because I'm going to jump real quick to James and talk about his big investment mistakes that are out there, because we've all got some.
Okay. Yes, it's kind of a very, very deep philosophical conversation you got going on here straight out of the gate.
Yes.
And these are times as well that I say, everybody gets kicked in the teeth. There's no escaping this. This is it happened hard, it happened fast. It was a confluence of events that brought everything down quick. So anyway, back to my big lessons. One is not going in harder on key investments. Like going in hard, but just doubling down would have been more than life-changing. And sometimes that stems back from, sometimes I got into stuff when everybody was talking bad about it. That includes Tesla, that includes Bitcoin, that includes Ethereum in the early days. People saying, oh, it's never going to rebound. So listening to others can be very dangerous. And here we are talking to people and we're hoping they listen to us. But, listening to others, listening to, like, even if you look at what is published in investment rags today, literally 80% is complete garbage. And they're way behind the curve, etc. So make sure you listen to really, really smart people. The other thing that's kind of interesting is taking profits too soon and both ways. So like I was hedging back in January of this year, I was shorting Tesla 1200, and I have a huge long Tesla position. And I took profits too soon. I kind of got nervous, and if I just had the patience and fortitude, because I know over time it's a volatile beast, and Tesla's trading under 640 right now, which is where lower than where we were a year ago. But the company is more than twice as valuable as it was a year ago because of opening huge factories and new technology, human leases. It's nuts. And then the other thing that I've made a mistake on this year was, I'm working on building something, and I put too much focus and time and energy on that. I ignored my own portfolio, and I deviated from my risk management rules. So they're kind of key lessons that maybe people can. And I agree with everything as well that Ben said.
Yeah.
How about you, Rob?
Well, so I mean, my biggest investment mistake, it echoes what Ben talks about with crypto. 2017, I went a little bit too hard, and I wrote it all the way up and all the way down. We know that. But the biggest mistake of investing I ever made was not in crypto. It was years ago. I helped to invest with a friend into a nightclub. And it was a lot of money. And I had no idea what I was doing. But of course, you get wrapped up to, this is the next thing. This is going to be big. And this is whatever else, which I think can echo a lot of what people may have gotten into as far as with FOMO and even crypto projects. So that totally collapsed. So I've learned one big lesson. Never invest in anything you're not 100% sure about and that you don't know a heck of a lot about. And I think if you can do that, even if you aren't totally super well versed, but really get into it and just really understand the principles of, just like now with crypto, I think you're going to be okay. Just don't get into it when it's just the bad choice. So there is that second part. And I'll open it up. I'll keep with James, because we have these principles. We know we're supposed to follow them, but what knocks us off the horse? Why do we forget these things that we're supposed to do? James?
Okay, so I have a mishmash of kind of key lessons that sometimes I don't even follow. One is stop losses, know when to get out, know, and that is tied into as well as constantly reevaluating your thesis. So there are things that fall and keep falling, and you need to know when to pull the pin and get out and move on to a faster horse, as I say. So constantly reevaluate your thesis. But if you are full in hard on something like take, for example, Bitcoin or Tesla, and they come to crazy low prices, like Tesla hitting 25,400, or did I say Bitcoin hitting 25.4 or Tesla going down? Again, these are times that you look back in 2 years, 3 years, 5 years and say, oh, God, that was such a good time. And I had a little bit of PTSD from July 2021 that I didn't buy enough Bitcoin at 29K. And I never thought we'd be here, 10 months later having the same opportunity again. So again, take this, everybody. It depends on your time frame. Know your time frames, know your plans, know your goals, know your risk management profile. But again, if you're in pristine assets that are game changing and we are in a transformational time, you need to be getting a little piece of these assets because they will change radically over the next 3, 5, 8 years. 2030, we'll look back. It's like, wow, this time 8 years ago, X was trading at Y price. And I knew DeFi would have been big, but I didn't go in hard enough. And this goes back to the mistake I spoke about earlier, having that conviction and having a mix as well, not a mix of similar assets, but a mix of asset categories is also very important. So that way, for example, times like this, you're happy you have your real estate, even though real estate is about to hit a wall and slow down, but it's been very good over the last couple of years. And that's it. And just remember, investing is a blood sport. On the other side of every trade is somebody willing to punch you in the face. So always go in with your eyes open. And again, have high trust in management teams of companies and tokens. Analyze the people behind these projects. Absolutely critical. When there's a sign of weakness, bounce.
I like that. All right, Ben, I'm going to roll it into same thing. It's going to be, why do we forget these principles? And what are your golden principles, your golden strategies for crypto investing?
I think we forget things when things don't go according to plan. Yes. It's like right. Everyone has a plan until we get rejected off the 200-day, right?
Mike Tyson.
I think that, going into this bull market, going into the first parabolic rally, I think for a lot of, older investors or people who had just been in the market longer, it was really clear and easy to take profits on that first parabolic rally, right? It was really easy because it was kind of going to plan, right? It was like, okay, we knew a parabolic rally was going to come. It actually came earlier than I thought it would. And it was easy to navigate that. But then when you jump 50% and then go back up, and it sort of looks like the structure of the market is looking a lot different. It can be easy to forget some of the principles that you established in the bear market. And actually, when I go back and watch some of my videos from 2019, I remember talking about Ethereum, like the lower bound scenario would be like 4 to 5K. If it's more optimistic, it might be like 8 or 9K, something like that. But then whenever the time comes, when you reach those prices, you just want it to go higher. You sort of forget how far you've come, and greed kind of takes over.
Yeah.
Well, I think that's probably the biggest thing, is that you can forget how far you've come, and you forget that Ethereum was at like $100 just 2 years ago. You forget that Bitcoin was at $3,000, $4,000 just 2 years ago, and the prices that are today, like while they might seem cheap, it's still a lot higher than where we were just a couple years ago. So I think part of it is just bull markets can last longer than you think, and so you might try to change your strategy in the middle of it if it's going on longer than you think it should, and then if you change your strategy, that might not be the best thing to do. So I mean, some of the main things that I stick to, for especially right now, which is more relevant than ever, I think, is I'm not touching altcoins with a 10-foot pole, because I think that Bitcoin valuations are in for a major reckoning. And you might say, well, they've already been wrecked. Yeah, they can keep getting wrecked for a while. Actually, they could drop another 50 to 70% against Bitcoin over the next few months. So those are the main principles, right? Altcoins are likely getting wrecked. Bitcoin dominance is going to go a lot higher. You should probably have cash in hand in case the market gets worse, and be Bitcoin heavy if you want exposure to crypto, because altcoins are likely going to get wrecked either way. And by the way, if Bitcoin does have a rally, which we know Bitcoin can go on Bitcoin only rallies, it still likely leaves altcoins behind. So I think don't make the mistake of assuming alt season is around the corner, is my advice in a bear market, because in a bear market, alt Bitcoin valuations bleed.
That's pretty much it. And Ben brings it. James, great answers. I got to tell you, it just makes me realize again that the problem I think that the most of us come into is what I think you guys both alluded to this: greed. things come up and you think, oh, well, it went up 20%. So why couldn't it go up 30%? And it goes up 30%. Why couldn't it go up 80 and 200 and 300? And before you know it, you're like, I just went down a little bit. It'll keep coming up. And it doesn't. And it doesn't. So for me, like my golden principles I try to go for is don't invest more than you can afford to lose. I try to diversify, and not just in, like James, you said it perfectly, not just in the asset class itself, crypto, equities, real estate. That's kind of like the thing, although real estate's not that, or equities isn't that much. And then also one of my golden rules now is to set everything with 2-factor authentication. It doesn't matter how much you make, it's how much you keep. And this week I got hacked. So I had multiple email accounts hacked, and I saw it in real time as they started to change the password. And also they changed the phone number. And the next thing they do is they went to the exchanges. And because I had 2FA on all the exchanges, they couldn't get past that. So these were old email accounts like in Yahoo that I didn't set up the 2FA. Thankfully on Google I did. If I had not set up that 2FA, all the things that exchanges would have been gone. And I would have watched it in real time go forward. So please, everybody, make sure you set the 2FA, because it's not how much you make, how much you keep. All right. So let's go on the second one. That was a long one, but these want to go a little bit quicker. So a recession. This was something that I actually took a look at, and I know that we're in a bear market. I think we can all agree there. But do you agree with some that are already calling it a recession? Because Elon Musk, he was on All In podcast, and he states that we need a recession, and of course we're here right now, and it'll be for the next 12 to 18 months, which is interesting because he called for a recession would actually happen in April or spring of 2022, and he was actually right. So the question is, are we in a recession? If we are in a recession, how long is it going to last? And where we go from here? So James, you're the guy for this one. We'll start with you. What do you got?
Yeah, I actually covered, I built a chart with the S&P 500 index and the history of recessions going back to 1928. And a couple of key things that are happening right now. In today's markets, as we learned with Luna, everything moves faster. So everything goes up faster, it goes down faster. Recessions are the same type of thing. It was pretty clear. I did a video 10 months ago, and I was kind of debating with myself against Kathy Woods. She was talking about deflation. I was talking about inflation. And I said, 12 to 18, I got to pull up that clip. 12 to 18 months from now, we'll see stagflation, which is high inflation and low growth. We are definitely in a recession right now. There's no doubt about that. We are staring down the barrel of 1970s style stagflation. The Fed is stuck. There will be no soft landing, but things do happen fast. So there's a lot of weird stuff going on this year. We've got an election year. We've got the politicized Fed. They have to do what it takes for people to get reelected. So I do think, summer's going to be nasty and brutal, but sometime August, September timeframe, the Fed is going to stop raising rates and we're going to go bonkers. And that's just the nature of the beast. So recession will probably last 2 quarters. And remember, a quick hit. There are elements of the economy that are still strong, but elements that are really getting crushed. And that's why I think stagflation is here. And the stagflation is no good for nobody. So the Fed will be forced to stop what they are doing after maybe 100 more basis points, which is 2 times 50. And then they may also have to reduce the amount of their QT, the quantitative tightening, or even flood some money into the system because they're dependent on tax revenues. And I can't remember what the exact number is, but tax receipts cover only a quarter of the actual deficit that the government runs. So it's just the government is in this big, massive debt spiral. So we'll see what happens. Now, speaking of the market itself, recession, typically what's very important to note for all the investors out there, by the time the world finds out we're in a recession, everything is kind of bottomed out and it starts going up again. So again, I think I mentioned that on the show a few weeks ago, but that's kind of where we are. So you just got to be on the train at the right time. I think selling out now, moving to cash now with everything at these crazy valuations. Like Jurian Trimmer had a very good post today on Twitter. Follow him. He's a brilliant macro guy, market guy. He sees everything as it is, and he sees valuations right now as being extremely cheap. And so do I. Like, again, you got Tesla trading at 600. It's going to probably do $25 to $30 per share. So it's not trading far off a PE of 30 for the fastest growing company on earth. It's kind of ridiculous.
Nah, crazy. All right, Ben, it's the same thing, but I'm going to roll it into the next question too. So do you think we're in a recession? And then if this does actually last, what trades are you doing during this time, if any?
Yeah, I mean, seems likely we're in a recession.
Yeah.
And I think, yeah, like it's probably going to last probably a couple quarters at least, maybe 2 or 3 quarters. Remember that stocks normally bottom before the recession is over because they start to price things in ahead of time. So, I mean, this is probably one of the reasons why stocks have been so bad recently, is because it's kind of apparent that's where we're headed. I think a lot of discretionary spending is going down. With the Fed raising interest rates into a slowing economy, that's not going to help. I'm probably going to do 50 basis points in June and July. And then I'm guessing they'll scale it back to 25 basis points as we get into the end of the year. I don't know that they're going to stop this year. I could see them going into 2023. But if they do go into 2023, I think they'll stop raising interest rates sometime in 2023. And then they'll be forced to eventually start to lower them again. I don't think they're going to lower them this year. So I'm not really envisioning that. But I do think we're in a recession. We are. It'll probably be confirmed in a couple of months, right? When we find GDP is negative again, and like the stock market is pretty brutal right now. And what was the second question? What would I be?
Yeah, what are you trading? I mean, are you doing any trades right now?
So I mean, as far as crypto goes, I think people should be focused on Bitcoin only, and that way it helps protect you from the downside risk of altcoins, but still gives you the luxury of experiencing the pump if we have a pump back to 40K or something, which could easily happen. I mean, we can always go back to 200 and get rejected. We like getting rejected, so I wouldn't be surprised if it happened. So I would say Bitcoin only. And as far as other things, I mean, I think there's some other key things. Like there are commodities right now. Like you have precious metals, you have gold and silver. And remember, I mean, like I know that they haven't done anything in a long time, but they do tend to do well with periods of high inflation after the dollar stops rallying. So the dollar's rallying right now. So I think gold and silver and some other things like uranium, palladium, they've kind of stalled out a little bit. But perhaps once the dollar stops, that's when they'll take off. And then, I mean, really, I think just cash is king. I don't even think it needs to be that complicated. I just think that cash is king, and inflation sucks, but losing 50% on altcoins sucks more. So cash is king.
Yeah, no, not to be funny, but it is. We lose a lot. And then, so James, I'll get to you, because I know, like, I watched your video and you talked about how important it was you're investing in a Tesla right now, especially with the potential stock split. And then Ben, just to add on to what you had said about Bitcoin, going heavier into Bitcoin. You said on one of your shows, you said it's a cruel mistress, because people who get into the market, and last one was 21, 22, the one before that's 2017. They don't really realize that Bitcoin pumps and then just kind of drops off, and they get into alts and they think, Bitcoin's it's a boomer coin. No one really gets into it. It drops off, they get into alts, and then those crash even harder. So if you're going to get into Bitcoin anytime, this is not financial advice, financial opinion, the time is right now. And just because we're in a recession, just remember that there was a lot of successful startups in the last big recession in 2008, 2009. WhatsApp, Venmo, Groupon, Instagram, Uber, Slack, and Square. They all started during that massive recession, the last one. So if you think that there's no opportunities, I think you just had to find them. And then, James, I'll ask you real quick the same thing. What are your trades right now that you're getting into? Because it's a kind of a tricky market.
Yeah, it is. And kind of we knew 2022 would be choppy after 2020 and 2021. That just wasn't sustainable. So I think the key is this year is cash is king. I'm trying to get back to 15% cash. Not there yet, probably around 10. Maybe 11, depending on the day. I am nibbling on things as they fall, because I just think, like, even looking at Tesla was like $1,140 40 days ago. It's nearly halved in 40 days. So that's an example of what I spoke about earlier. Things happen much faster in these markets. And the question is, Do you want to run into that burning building? Is this a generational buy at this price? Who knows? But I think it's all about pairs, relative pairs, relative values, relative market caps, mean reversion. Again, identification of winners, identifying when things are overbought and oversold. So is an interesting thing I spoke about yesterday in a video was Bitcoin is in this really weird range between like 28K and 31K. Every time it bounces above 30,500, the whales sell, people dump, and it's just like clockwork. So you need to be able to identify those ranges and play the pairs. And also there's some really interesting things happening for people now that most of us probably have some short-term capital gains. It doesn't matter. You can day trade stuff and make fast little wins. But if you look at some interesting pairs like ETH to Bitcoin, Sol to ETH, they have massive undulations. I'm trying to say the word in English. Schwankungen, swings, big swings that you can play as well. So everybody needs to start sharpening their tools just until, of course, until we get out of this sideways chop and we go back into a clear bull run. That'll happen fast. But like, for example, one thing I did on May 11th, I swapped ETH for Sol at 0.21 and it went up 18% in 3 or 4 days. So there is still money to be made. You just need to do a little bit of homework and find it.
Perfect. Well, you answered my next question, which was, what's your first pick of an alt to get back in? And James, surprise, Solana.
Well, it's not. It's again. I hate even mentioning the name because it generates so much angst. But if you look at any report out there, look at any metric, go to Masari, read the A16Z report, look at the chains are most active. I can't remember the exact numbers, but look at daily active addresses, look at daily transactions, look at growth rates, look at dApp development, look at engineers, look at all of that stuff. All roads lead to one name. And I know it's had an outage. It had a 7-hour outage on April 30th. It had an 18-hour outage in September 2021. We realized that there was a very good spaces with Anatoly about what they're doing to fix the risk of that happening again. So that'll give people confidence. But again, I remember when I was a kid, I was a teenager, and there used to be this motorbike called an RD350. And I was very young. I was like 15 years of age, and I was riding a bike that had the nickname Road Death. But I rode that bike because it was fast and you wanted to go fast. And at the same time, sometimes it's worth taking a little risk for speed. So I know it's a very bad analogy, very crude, but that's just the way I look at the world.
I mean, if it works, it works. That's all that matters. If it works, it works. And the website I just showed everybody, that was Solana status. So I know some people say it's out, or slow downs, whatever else. You can check that and you can see exactly what it is. 99 something % uptime. So anyhow, and then so thanks, James. Ben, question again, what alt? And so we know that we're big into Bitcoin, right? I don't know if you even consider Ethereum an altcoin at this point, or you just call it a blue chip.
I think Ethereum's going to bleed against Bitcoin for the next 3 to 6 months. Okay. If you look at the Ethereum Bitcoin valuation, you will see, apart from 2021, every other year, starting around the summertime, Ethereum loses value against Bitcoin going into the end of the year. It also happened in 2018. It started once Bitcoin put in the lower low, and then after Bitcoin put in the lower low, the following month, it really accelerated. So no, I mean, even Ethereum is subject to go down against Bitcoin. I don't think it makes sense to get into anything right now. Other than if you're going to get into crypto, I think it should be Bitcoin. And I think that basically every altcoin is going to be going down against Bitcoin for the most part, not all of them, but for the most part over the next several months. And if you're going to be buying an altcoin, I might suggest USDC.
Sounds like a plan. There you go.
And just to clarify for the audience, because sometimes people misinterpret things, I'm not buying, I'm swinging between Ethereum and Solana. Gotcha. So that's an important clarification here. I am still stacking Bitcoin as I can, and Tesla as I can, and Google when they get very, very, very cheap, despite the news of Google and things that are really crazy valuations now. There's so much is really oversold, and it's like you're pressed to decide on what bargain to buy right now. But again, cash is king, like Ben said. Try hoard as much cash because again, the next 2 or 3 months could still be very, very choppy. If the Fed does something unexpected, markets could dip hard, but they'll rebound fast as well.
Great segue, James. Thanks, man. So this will lead me to my next question. The Fed rate hikes, which we know they're coming up. So there's an upcoming Fed meeting, June 14th and 15th, then July, September, middle of that, then November, December 13th and 14th. So these are all coming up. And with CPI and PPI numbers being released around the same time frames, usually in the middle of the month, would you rather have Jay Powell go heavy in the next two meetings and get it over with? Or would you just have him like half point us to death? Where would you want to see this go? James, I'll start with you since you're up there.
Yeah, well, he's been very good at telegraphing exactly what he plans to do because he knows not to rattle markets, but he's been very clear as well. They need to solve the inflation problem because that's crushing everybody. It's the silent thief. So I think he'll do 50 basis points, and depending on the status of the recession, another 50, then maybe stop or do just a 25 basis points. But remember, every time they raise their interest rate 25 basis points, they shoot themselves in the foot, they increase their debt burden, and the GDP per capita is just spinning out of control. I can't remember, but in terms of the US ranked against other main economies, the tax to GDP ratio is ranked, 32 out of 38 top countries. And if they raise the rates too much, they're going to spin what is already a recession into a financial Armageddon. And that's a big problem. And the thing is for everybody to look at, the answer's there. You look at the long-term treasury bond yields, and they move typically in the direction of short-term rates, but the spread from them tends to shrink as rates rise because longer-term bonds are more sensitive to expectations of future slowing in growth. And if you look at the 30-year now, it's actually dipped, it's gone down, and that is kind of like the roof, the cap of where they're going. So when people say they're going to raise 7 times, it's not possible. The bond market knows the answer.
Nah, we'll see. So then it goes back to you. Would you rather just have him half point us, or do you want just to say, you know what, just go ahead, 3/4 of a point, 1 point, get it over with, hit the inflation hard, let it drop, and then go from there?
Bear markets suck, but as long as you recognize we're in a bear market, you can plan accordingly. So after a bear market comes an accumulation phase before ultimately, ideally speaking, right, another bull market. So do I want them to just get it over with immediately? Not necessarily, because if you are trying to stack cash, you need time to do so. And if all of a sudden the bottom we're in tomorrow, then you might not be able to stack as much. So yeah, I would say I would actually prefer it to drag out a little bit longer, so that so that everyone can really take the time to recognize because I think most people have come to terms now with the fact that we're in a bear market. But once you recognize it, you still generally have time because the trend will continue on for a little while. I think it'd be good if people had more time to really prepare for the next accumulation phase / bull market. So I'm fine just watching it sort of slowly play out over the next few months.
Yeah, sounds like a plan. All right, let's wrap this up. This one's a little bit more of a deeper question. So this is probably the last thing we talk about as far as Luna on this channel. So Luna, how would you handle the aftermath of this disaster if you were Do Kwon? And would you trust another project from Terra Labs? Ben, you're up there. I'll start with you.
So I have never been very bullish on that ecosystem. I mean, I've never made a video on Luna or anything like that. And part of the reason is because I always thought it seemed a little unsustainable, and I don't like going where yields are that high. And actually, you'll find a lot of yields that are like that even now today, and even a lot higher. Like you'll find yields that are much higher than that in DeFi. And I tend to stay away from those just because I don't really trust them. If they're a lot better than what you'll find in traditional financial markets, then they're not sustainable. And if they're too high, then they don't even have the luxury of slowly pulling them back down. So would I ever trust them again? Well, first of all, I didn't really trust it in the first place. So I probably would not trust it in the future either. I think that I've seen a lot of altcoins be unable to recover from less severe things. So if altcoins can't recover from less severe things, and oftentimes they were unable to recover from things that weren't even their fault, you know, it might have been the fault of something else, and they were just sort of in the crossfire. I don't think Luna will recover. It doesn't mean that if they fork it, it doesn't mean that it can't have occasional pumps. But if you go back and look from one cycle to another, there's coins that pumped in 2013 that didn't do anything in 2017, and then there's ones that did something in 2017 that didn't do much in 2021 or 2020. And sometimes they will still bounce, but they won't put in a new all-time high. I mean, look at Litecoin this past cycle. It basically just went up to the same high that it went into in 2017.
Yeah.
Look at XRP. It didn't even go to the all-time high. And then you go down the list and you'll find so many different coins, relics from the last market cycle that did not put in new all-time highs for whatever reason. And I look at Luna and I say, you know, they have a mountain to climb at this point. Trust is completely gone. The best thing that I think can happen, the best thing for the entire asset class as a whole is to learn the mistakes from Luna and move on and eventually just sort of treat it as a relic, not something that's going to keep going. I also sort of have a problem with, you know, them just forking it, you know, and some of the voting mechanisms I think aren't really the best. But I will say I don't trust it. I'm not going to put any of my money into it. Doesn't mean it can't pump occasionally, but it's not something I'm focused on. And if I were in the position, like if I found myself in the position of you know, their leadership, I would probably do the best I could to compensate people, you know, through official means.
Right.
And I mean, that's easier said than done, right? But I would probably try to do something like that. And I would not focus on just spinning off new projects and that sort of stuff when you still have this other massive thing that you have to deal with. Like, this problem is not going to go away just because you fork the code. So a lot of issues to solve. And honestly, I don't even want to spend my time, you know, even thinking about it as we go into the next cycle.
Yeah, it's awful. It's awful to think about because all the people lost their money, but it's something I think that we should always have in the back of our minds, especially with the hubris, and I'll get to that in a second. So James, what do you think here?
Yeah, well, first of all, people think I was pumping and chilling. This one, I made a video about a theoretical model of how I got very enamored by Luna when they said they'd become Bitcoin backed, and that sucked me in. The largest position size I ever had for Luna was 0.6% of my portfolio. And I said, every single video I made 3 videos on Luna. I always said it's risky, it's a speculative asset, and there's always that depeg risk. I always hammered that home, and that's reflected in exactly what I told the audience about my portfolio size as well. Anyway, back to that. What he did, he was too arrogant. He still has master of stable coins on his Twitter feed, for God's sake.
Wow.
He showed all his cards. He made himself a target of TradFi. It's a classic case of TradFi meets DeFi or TradFi meets crypto. And, you know, the bigger, smarter, older money will hose them. So I think his biggest problem, and it's kind of shocking when you reanalyze this, is they had terrible risk management. They should have stress tested the protocol and been aware of the depeg risk, what it would take to take it down and shore up against that. And they never, ever did that. So, and he should have also been open and communicated in the face of such a PR disaster. So should have Mike Novogratz and Pantera Capital. Everybody was kind of quiet for too long. If the number one rule of a PR disaster, you get out in front of it and you talk about it immediately. Don't just go run away and hide. So nobody will ever trust him again. He's toast, and it'll never arise from the ashes. Yeah.
Remember guys, when Ledger had their data leak?
Yeah, they kept it quiet.
They kept it quiet for a long time, and that hurt them for still today. So it's a good point. Get out in front of it as fast as you can. Make sure that you compensate for what you can do, and then try to move on. The problem that I see, for me to trust Terra Labs or to trust any kind of stable coin or algorithmic stable coin, you got to remember that Do Kwon, this wasn't his first rodeo. He had done another coin before and it failed. And now here we are. So that'll be the last time I talk about Luna on this channel. Hopefully we can all move forward and try to remember those things, but that is it. So gentlemen, thanks so much for coming on the show and answering some pretty tough questions in a really junk market.